Welcome to Trading Lounge and the Australian report for the 8th of October. So, the current move up through here, you know I've been struggling with it a little bit, and there's different variations and ways that it can be countered. But it's kind of okay with wave 4 being on this low here and then pushing up, and this would be in line with the US market. So I've been sort of okay with it, and it's starting to pan out quite nicely, even though we've had a hard time. I mean, for starters, this move up through here, I can see how it can be counted as 5 waves, but it's very tricky, kind of like forcing it. So I've been a little bit reluctant. So one of the things we've been waiting for, of course, is a move above the 6,000, and then for that to become the support. So a little thing with Thursdays, it tends to open higher and then close lower for the day. But even closing lower for the day is a bullish thing for a Thursday, because then we expect Friday and Monday to be bullish. So we'll see how that plays out. But let's go in and have a bit of a look at this. And we'll also have a look at some stocks as well. So on the 4-hour chart, from the wave 4 low here, we're looking at this as wave 1 and 2 here. Nice ABC pattern here. And I can count 5 waves up into this move here, as you may know, and back for wave 2 here at this point. The other thing here is, yes, the 6,000 is here. The 61.8% retracement level, we're trading above that now, which is healthy. The only weak spot in this so far is that we haven't retested, like this is like the breakout here, but we haven't retested the 6,000. So that would be nice to be able to see that be done. But Thursday, as I mentioned, tends to open a little bit higher. But what I'm sort of thinking is that that will probably come to about there and here for that. So what it will leave, this second high here, that will be a long trade from that point. Okay, you could buy it back in further in the low position here, but by looking at it intraday like here, it doesn't seem that it really wants to come back as well. So let's just drill in. This is the hourly chart here. So we've got wave 1 here and 2 here, and then I can count, I'm quite happy with wave 1 and 2 here, and I'm happy with 1 and 2 and 3 and 4 and 5 here for the third wave. Wave 4 here, pulling back to the wave 4 of 1 lesser degree here, and then 5 waves up here to make wave 1, and then back for wave 2 here. So I'm kind of okay with these. Would have been nice to see wave 4 a little bit more complicated, and maybe we could shift wave 4 across here. I need to double check on this though. But this little move up through here, I can count 5 waves in this little sequence here. So that means that if that's correct, then it's unlikely that we'll come back into this space, you know. It's just, looking at this here, it's just likely that we're just going to continue to the upside for this and have a classic trading levels pattern across the 1 here, the 100, and then move up from that point. So we're looking for that classic trading levels pattern here for that. So that looks like this here. So if that's the 100 across here, the arrival, the reaction, first high above the level, that reference point triggers long trades. The second one here triggers long trades, and that's what I'm talking about now. And this, if you're lucky enough to get, well, this little section in here where we've got the up here and down here, this whole little, this inside of this here will be this bigger pattern here. That will all be wrapped up in this little space here for that. So that's why that second entry can come into play there. Yeah, let's just drill in a little bit further. So from this wave 2, this is all pretty clear to me here as a nice structure here, and just checking on a few things. Yeah, it seems to be okay, this one, and that's okay. So yeah, on the tick chart here, I can count 5 waves up here. So just on that's 15 minutes there. It's a bit hard to see on 100 ticks. Maybe we'll just have a quick look. Just, yeah, don't worry about this here. It's not right. It's just something that I was playing with here, just considering, but it's not the case. Still a bit hard to see 5 waves on 100 ticks. So on 5 ticks, it becomes a little bit easier to read. Well, still need to get the chart in here. But basically wave 1 here and ABC for wave 2. So that's wave 2 there. Then we've got 1 and 2 and 3 and 4 and 5 for the third wave, fourth wave, and then 1 and 2 and 3 and 4 and 5 for the fifth wave here. So it looks more like a fourth wave coming across here rather than a wave 2, you know. So it bothers me a little bit. This little move up here can be counted from the low here, can be counted 1, 2, 3, 4, 5 here for 1, ABC for 2. Nice third wave, wave 4 overlaps this, so it may be wave 1 and 2, 1 and 2 here for that. We just need to be a bit mindful of that. And then we've got 5 little waves in this little structure here as well. So, yeah. So, but also too, this here is corrective. Well, it's only in 3 waves. It's only corrective if this high here gets taken out. This also looks impulsive here as well, like 1 and 2 and nice third wave in here. So this appears to be corrective. This appears to be bullish here as well. So to me, it's all just pointing up and won't come back to this 6,000 area here. So just, you know, we talked about being long above the B wave here. I don't know if you've caught that or not, but yeah, and I was also looking for another setup on the 6,000 here, but we just didn't get it. It just sort of plowed on straight through here. So I think it may just continue up, but just be mindful of Thursday can open one more high here and then roll over for the day. So just be a bit careful about that. Let's just go back to the 4-hour chart for a moment. So just to put things in perspective a little bit, if, like a big if, that this is the correct count, well, then we'll be looking for something like this here. For this, like wave 3 will be up here, and then there'll be obviously wave 4 and wave 5. So the target area to the upside is 6,500. So basically we'll be working through group 1 here, which is 1, 2 and 3. If we get support on the 300 here, then that cements it in that we'll be moving to the next number 5. So really the idea to get from A to B here takes a little bit of thinking, you know, because if you're an intraday trader, then it's not likely that you're going to get into this particular trend and hang in there for that, you know. But if you want to, take the risk of getting from, all up to even just to this old high here at 6,200 here, it means that, you're going to have to trade less and have wider stops in play here, because what we can do is just look at, because I'm a bit unsure about this, what we can do is look at this space here. It does look like it's going to go further, but the stop is under this, that's the 61.8%. So we need to be below that. So the stop needs to be down here in a way to get, and it's the risk reward factor, it kind of makes sense, if you're risking this much here to get this much, or even to this much or this much, then it makes sense. But you can't do two things at once. You can't, trade your full max at this stage. The setup's just not there for that. But let's see what happens for Thursday, and we'll look for a better entry on the Friday, okay? But just be mindful that the market Thursdays, it is Thursday, isn't it? Yeah, can open higher and then trade lower for the day. Now, I also want to talk about some stocks. So 2 banks and some resources. So with CBA here, now CBA's got a different count than ANZ and WBC and so on and so on. But we were looking to take half a trade on this top here, and that's triggered in now. So that's there. So I'll just leave this the way that it is for the time being. We'll be able to add to this a little bit later on. If you're a day trader and you're looking to take profit, then the 68 is where the bids are the sellers are going to be. Well, the bids will be hit from the sellers at that 68. So you could use that, and also use the 68 as a classic trading levels pattern across that level there as well. Because support on top of that 8, that will take us up to the 70 at that next stage. We also looked at ANZ, doing the same with ANZ, buying this new high here. In both cases for ANZ and CBA, this move up through here doesn't really count very nicely as 5 waves. So there's a question mark about that. But the reason that we're going for it is because the move down through here is not impulsive, it's corrective. It's some sort of A wave, B wave and C wave here, pulling back to the 61.8%. And if that's the case, we can look for 5 waves up into this space at the 20 there. So that makes a good trade at that point. FMG, iron ore. The iron ore hasn't moved, of course, because India's got, not India, China's got, well, the Chinese market, this is it here, looking at it here, it hasn't moved because it's on holidays. And also the iron ore market hasn't moved all week as well. So I think they come back today, actually. If they don't come back today, then they'll come back on the Monday. So I'm not quite sure about the Chinese holidays, but that's where that iron ore price is based from. So, but yeah, that's positive there. So we were looking at FMG. Now, we're looking at this as an A and a B and a C wave down here. There could certainly be another low here, but all we were doing was taking a half position on that high. So it's not triggered in today, and it also doesn't show a nice impulse wave to the upside here. So it could be a trap at this point. And that's the same with BHP as well. So with BHP, we were looking to do half a position above this particular high here. So that's been triggered in. The wave C here, I just don't think it's actually completed yet. I think that we've got, I think we've actually got one more move to the downside. But the thing is that crude is up 0.89%, copper's up 2.22, just over 2%. The Australian dollar is looking healthy, so I mean that's a good thing as such. So yeah, I'm just thinking with this here. I did look at this before, didn't I? I just didn't look right why that's doing that. I just want to have a look at the. Bear with me a second. Just want to have a look at BHP here. This is BHP here for this, and what I'm doing here is this is the A wave here, the B wave here, and I was looking at this being the C wave down here, but realistically this could count as 1 and 2 and 3 and 4 and 5 here for wave 1, then back for wave 2, then 1 and 2 in here, 3 here, 4 here and 5 here for the third wave, back to the fourth wave here and down for the fifth wave here. So I think there's one more move in here to be had that take us down to, I don't know, just below the 35. It wouldn't do much more below the 35, below the 35 as such in that case. So that's it here. Sorry about that. So the 35 is support, so maybe just down a tad here. So I think that we may get trapped here. I know that I looked on here. and I could get the 5 waves in here. That's why I took it. So we looked at 1, 2, 3, 4, 5 for the wave 1 and 2 here, then 1, 2, 3, 4, 5 for the third wave in here, the fourth and the fifth. So I can see that it's sort of wrapped up in here, and that's why we looked at it. But on the daily chart, it just doesn't look that finished, but we'll see. What we could say here, though, you could start stacking it. Well, we got between 40 and 30 here is a major trading level. So between 30 and 40 here, the levels would be 1, 2, and 3 is group 1, and then the midpoint here as the 5, and then group 2 here, 65, 72, and 80. We can see at the moment that the market has found the group 2 as the resistance here. So now that it's tested lower, if it finds the 65 here, the 3650 as the support, or it can just move up into that there somewhere and find support, then you know that we're on our way at that point. But if it can't do that, that's the line in the sand. So what we could also do is we can you could build in on 65, but definitely build in on 72, which is 37.20 in this case, or 37 would be fine as well, really. So coming back to the daily chart here just for a moment. I don't have group 2 in here, but you know what I'm talking about, so I don't need to go over that. We should just look at Rio. Let me just find Rio for a second. Just have a look on the tick chart for this. What have I done here? Okay, well, that's what we're looking for here. I mean, if I take that as 1 and 2 here, then we'll take this as 1, 2, 3, 4, and 5 to this point for the third wave, fourth wave, and fifth wave. See, the extension, when the extension's in the third wave here, basically wave 1 and wave 5 will be roughly the same here. So what we could do is this move here looks corrective to me, this move here. So we can go long, and go long anywhere really because of this. This is, well, technically we need to take out that high here. So we could do that, put in a small position here for this, and because let's just check out China for a moment. Yeah, so that China where that green line is there, we've got a nice support. The pattern, that number 4 there, that pattern, that's corrective. So, you know, we can look to, not that we trade this market really, but it's a good sign for iron ore, put it that way, you know, and obviously China needs a ton of it, well, more than tons, but yeah. So I think that we could just about call that low in here for that. And what we can do is we can just take a small position above that high there, whatever that high is there. You can figure it out on your own platform. 1 cent above that high. And then we'll look to build on that. You could probably just copy that and put another one in here somewhere. That's 98 here. So 98, we're going to see the market pull back. So we want to see that above there. And then, so 2 half trades in below here, and then we can start stacking it from above the 100. But that will give us a little bit of pocket money while we deal with this 100, because we'll need that. It'll be something like, you know, the normal sort of swing sort of thing like this, you know. So we'll need to accommodate all of that as well. Okay, I think that should do the trick. So thanks for tuning in, much appreciated. Cheers.